Hey, what's up, guys? This video is going to be about candlesticks. I know when I first started trading, these things looked like Egyptian hieroglyphics to me. I had no idea, what they mean. So I'm going to break that down for you. I know trying to read it on paper can be confusing, so let's make a little video. We're going to talk about a little price action. But first, I want to talk about, the functions of the candles, right? So you have two candles. You have green candles, which are telling you that the price is going up, and you have red candles, which is telling you that the price is going down. If they're going up, if they're green, this is referred to as a bullish candle, okay? And we'll talk about the red candles in just a second. But you see on my screen here, yes, I'm in Paint. I find this easy to show you some price action. You have 4 points to a candlestick that we need to define. Okay, so with a bullish candlestick, a green candlestick, you always have the bottom of the body, which is this part right here is the body. Okay, the bottom of the body is always the open. Likewise, the top of the body is where we closed. Okay, and these lines pointing out, these are referred to as the wicks. Okay, or some people call them tails or shadows. I call them wicks. I think candlesticks and wicks, and just makes sense. So you have candlesticks. The wicks will tell you the low of the candlestick and the high of the candlestick. Okay, so let's refer to this candlestick as let's say we're looking at a 5-minute time frame. What this candlestick tells you is all of the price action that has happened within that 5 minutes. Okay, so within 5 minutes, this candlestick opened here, it pushed down to the low here, it pushed up to the high here, and then finally at the end of the 5 minutes it closed there. All right, so in real time, you will see something that that looks like, actually let me just go ahead and erase that whole thing, and I'll change my color back to green. We're going to do a little price action here. Okay, so when the candlesticks first start forming, you won't have these wicks. Ignore the wicks. Okay, but the candle opens here, it will push down to the low here, then at some point during that 5 minutes it pushed up to the high here, and finally at the end of the 5 minutes the candlestick closed here. And all of that movement within the 5 minutes is considered the price action. On the flip side, we have here a bearish candlestick. You'll notice that these candles are very similar. Okay, the high is still the top wick, the low is still the bottom wick. The only difference besides color between a bearish candlestick and a bullish candlestick is that the open is at the top of the body rather than the bottom, and the close is at the bottom of the body rather than at the top. Okay, so using our reference to this being a 5-minute chart time frame, let's take a look at what the price action would have looked like for a bearish candlestick during that 5 minutes. Okay, so our open, we would have opened here, we would have pushed up to a high here, we would have gotten pushed down to a low here, and then finally closed right here. Okay, and since our closing price here is lower than the opening price, this means two things. We have a bearish candlestick and our price is going down. So what do all of these candlesticks mean? All right, candlesticks they're read the same no matter what time frame you're on. Okay, so currently I am on the 1 minute time frame here on my chart. So each one of these candlesticks represents 60 seconds of price action. Okay, the price opened for this candle here, right? It opened here, it pushed up to the high of this wick, pushed down to the low of this wick, and then wound up closing here. And that was 60 seconds of price action. Now, this can be changed to the 5 minute, 10 minute, 1 hour, 4 hour. Let's go to the daily chart. Okay, all of these candlesticks are still read the same, guys. So for a green candlestick here, we can see that the price action, we opened up here, we pushed down to the low here, pushed all the way up to the high here, and in fact on that same candle we had closed right at the high, so there is no high wick. We closed at the high there. Okay, this is a bullish candlestick and represents 1 day of price action. So each one of these candlesticks on the daily time frame represents 1 day of price action. That's a full trading day right here. We can go to the weekly chart, and now we have a full week of price action. This is 5 trading days in 1 candlestick. Okay, so you can break it down depending on each, whatever time frame you want to look at. The candlesticks are read the same no matter what. So why is it so important to learn candlesticks? Okay, candlesticks, not as a single candlestick, but as a whole, basically give you market direction. You can figure out if a market is bullish or bearish based on the types of candles that it's forming over time. All right, so what I have pulled up here is the 5-minute chart for Amazon. Remember, each one of these candles represents a 5-minute time frame of price action. So the day started, this is pre-market here. The day started, and immediately we can see we just kind of had some bouncing around. Okay, what is that telling me? That's telling me that at the bottom of these candles, understanding that this is a zone, right? We always have to think of support as a zone. The bottom of these candles is building some support here. Okay, so from that support, we bounced and made a move up to here, which is the high of all of these candles combined. Okay, so what happened when we hit that high? We pulled back a little bit, and what this pullback is representing, these are sellers. Okay, so people that bought in down here, the market the ticker started pushing up. Amazon was pushing up. And people decided, okay, I've got enough profits. Let me take profits. I'm going to sell. So they sold. Some more people bought. Okay, more profit taking happened again. And what are we looking for? We're looking for this high to be broken. Okay, so as soon as this area was established right here as a support area, okay, because we were bouncing in this area. Once that area was established as a support area, we had more buyers come in on the second bounce, pushed us up. We broke the high, and as soon as we broke the high, we continued up higher. That continuation move to the top side, that continuation move that pushed us higher, is telling me that overall Amazon is moving up, right? The trend, the overall trend is up, and we can see that even into, this is after hours trading. We can see that even into the next day we continued up. And so that's how you can use candlesticks combined together to be able to determine a market direction or a stock's direction.